Assalamualaikum and hi to our lecturer, Puan Zuraida. Today, me and my group members will present about risiko return and financial ratio analysis based on 3 companies that we have chosen, namely Genting Berhad, Sandabi Berhad and Petronas Dagangan Berhad. So, this is my group member who will be present with me today. The first picture is me. My name is NURAINI binti MIOR RAZALI. Then this is my group member, KHAIRUL binti HAFIZUL NAZMI, FAIZAH binti RAZALI and SYUHADATUL ATIQAH binti SAZALI. The content in our presentation is an introduction to the analysis that have been made from the 3 companies that have been selected, risiko and return analysis from the selected company, as well as ratio analysis, and the last but not least is conclusion and recommendation based on our analysis. So the purpose of our presentation today is to summarize the report we have made regarding the analysis of 3 companies listed on the main market of Bursa Malaysia based on fundamental analysis. Therefore, we decided to focus on the consumer and product sector. Among the company we have selected are Genting Berhad, Sandabi Berhad and Petronas Dagangan Berhad. In part 1, we have made a related analysis of the 3 companies that have been selected by finding the rate of return of each company using Excel. We find undervalued companies as well as overvalued companies in this section. Afterwards, in part 2, we have made an analysis of each company by using ratio analysis. Among them are liquidity ratio, activity ratio, leverage ratio, profitability ratio and market ratio. Finally, we will recommend to potential investor which one is the best company to invest in based on our analysis. Part 1, risiko return analysis. For the first company, Genting Berhad, after making an analysis using Excel, we found that their required rate of return is 10.6632% and their annual return is 37.74869%. For Sandabi Berhad, their required rate of return is 10.3580% and annual return is 4.1470%. The last company is Petronas Dagangan. It shows that their required rate of return is 6.7376% and their annual return is 0.0965%. Overall, from this analysis, we can conclude that Genting Berhad is worth investing in as the company is undervalued and another 2 company is overvalued, which is Sandabi Berhad and Petronas Dagangan Berhad.
In the liquidity ratio, the first graph is for Genting Berhad, common ratio and quick ratio trend for 2018, 2019 and 2020. As you can see, the common ratio has increased from 2018 to 2020 and the quick ratio also increased. And the second graph was for Sandabi Berhad. The common ratio has decreased from 2018 to 2020 and also the quick ratio has decreased from 2018 to 2019 but was increased in 2020. The third graph shows Petronas Dagangan Berhad common ratio has decreased from 2018 to 2019 and it has increased from 2020. For quick ratio, it has decreased from 2018 to 2019 but increased back to 2020. It is the same as common ratio.
Activity ratio. According to the graph here, we can see that the Genting Berhad inventory turnover increased from 90.01 time to 21.42 time in 2020. The company generate more than RM1 in income from every ringgit invested in asset in 2019. According to total asset turnover for Sandabi Berhad, inventory turnover fell from 4.59 time to 4.09 time, indicating that they are increasingly attached to an item spent in inventory and less to return to be earned from fund locked up in inventory. For activity ratio, Petronas Dagangan Berhad, inventory turnover increased from 33.57 time to 40.85 time, indicating that the less tight an item spent in inventory and the better the return to be earned from fund tied up in inventory. Next is leverage ratio. The graph here shows the debt ratio of the 3 companies. It shows the percentage of total fund provided by creditor, which is consists of long-term debt and current liability. Genting Berhad debt ratio has increased from 2018 until 2020, while for Sandabi show that in 2018 and 2019 the percentage was decreased and increased again in 2020. Petronas Dagangan Berhad debt ratio is the best performing because the lower percentage is better than the highest one. For time interest earned of these three companies is measure the ability of the firm to meet its fixed interest payment. Genting Berhad show the company ability to pay its fixed interest payment has increased in 2018 and 2019 but suddenly decreased in 2020, while Sandabi show the company has slightly decreased in 2018 until 2020. Just like Sandabi company, Petronas Dagangan is also show the company ability to pay its fixed interest payment has slightly decreased from time to time. However, Petronas Dagangan show the best performance for this ratio compared to the others company.
In the profitability ratio, as you can see, the first graph is the return on asset from 2018 to 2020 for the three companies, which are Genting Berhad, Saudi Berhad, and Petronas Dagangan Berhad. Of all the three companies, Saudi Berhad has the lowest ROI value compared to Genting Berhad and Petronas Berhad. Moreover, Petronas Dagangan Berhad has the highest ROI value compared to the others. Next to the graph, we have the GPM graph, which is the gross profit margin. It is still the same company as before, which is Genting Berhad, Saudi Berhad, and Petronas Dagangan Berhad. As you can see, Genting Berhad has the lowest GPM, and all the companies' net profit margin decreased in 2022. However, all the companies are still able to earn enough net profit margin.
So, I'm gonna talk about the last ratio, which is market ratio. The first one is price earning ratio. For Genting ratio, it have good performance in market ratio. The price earning in 2018 is for every 1 cent from 1 ringgit. For 2019, the expected price of shares at that time is 11 cents less than 2018. However, the increase has taken place in the following year, which is 2020. The price earning ratio is 21 cents from 1 ringgit. For Saindar Berhad, the price earning ratio in 2018 is every 7 cents for 1 ringgit. The company has found more earnings, so the expected price of the shares at that time is 8 cents from 1 ringgit of their investment in 2018. However, the increases has taken place in the following year, which is in 2020. The price earning ratio is 10 cents from 1 ringgit. Petronas Dagangan Holding has a less performance in this stock market. Based on the graph above, the price earning ratio in 2018 is for every 26 cents from 1 ringgit. The company is expected the price of share is 26 cents. In 2019, the company has found less earnings, so the expected price of the shares at that time is 30 cents for 1 ringgit. However, the increase has taken place in the following years, which is in 2020. The price earning ratio is 80 cents from 1 ringgit. The next one is earning per share. For Genting Berhad, earning per share has increased by 63% in 2018, and it getting higher as much as 1 ringgit 77 cents in 2019, and the earning per share has dropped by to 54% in 2020. The next company is Saindar Berhad. Earning per share has increased by 30 cents in 2018, and it has dropped by 15 cents in 2019. And the earning per share has decreased in 2020, which is 13 cents. The last company is Petronas Dagangan Berhad. Earning per share has increased by 87 cents in 2018, and it has decreased by 84 cents in 2019. And the earning per share has dropped by 27 cents in 2020.
The conclusion I can conclude from this whole analysis is that Genting Berhad is worth investing in, as the company show the best performance compared to the other two companies. It also shows that this company is the safest in terms of liquidity, moderate in measure of a business financial risiko. Also, it is the strongest company in profitability compared to the other companies, and good in managed debt. Overall, I can say that Genting Berhad is very well managed compared to the other two companies. That's all from us. Thank you.